Okay, this is Thomas Freed at Tax Freedom with a hyphen there, tax hyphen freedom. At Tax Freedom is our Yahoo channel. And I'm going to talk a little bit today about the jobs employment reports that the media is reporting is so wonderful and the Federal Reserve Bank is relying on to make its decisions about what to do. Because as long as the employment is hot and appears to be going along as they're reporting, they're not going to lower interest rates, and that's going to make the situation on Main Street even worse than it is today, where the banks have stopped lending under the inverted yield curve. The Federal Reserve needs to lower interest rates so that the banks can start lending money again. As long as there's an inverted yield curve, they're not going to be willing to loan. They're going to tighten lending standards, and more people are going to be denied as more and more people fall delinquent on bills and get closed out for lack of access to capital. Main Street has a real problem, and it's all being hinged on, or the problem's being created by the Federal Reserve Bank's refusal to start lowering interest rates and get the short-term rate down below the long-term rate so that banks can make money when they lend. As long as the short-term rate, which is the rate the banks borrow at, to lend at the long-term rate, as long as that long-term rate is lower than the short-term rate, the banks lose money on every loan they make, so they don't lend. And we got $34 trillion worth of debt. It's incredibly important that the banks keep lending new money into circulation so that the existing debt can be serviced, or it's going to be a collective default by the whole system. Now, these jobs employment reports are important for that reason. And what's happening is these numbers are baked. They're baked. The statistics are manipulated. The reports are false. You're being fed a false narrative. And the narrative is being used by Federal Reserve Chairman Jay Powell as the excuse for not lowering interest rates. So it's time that we speak up and let them know we know what's going on. We're being lied to. Let me give you an example. Last month, they came out with a jobs report that said 1.3 million jobs. Holy smoke! It blew the numbers out of the water. Oh, but when you look into the report, what you found was that they lost 1 million full-time jobs. They didn't pick up 1.3 million full-time. They lost 1 million full-time jobs. So how did they report it? As 1.3 million new jobs? There were 900,000 part-time jobs and 400,000 new full-time jobs, for a total of 1.3 million new jobs, most of them part-time, and most of the full-time hires was the government, not the private sector. You lost 1 million full-time jobs. And you know the 900,000 part-time jobs weren't being taken by people who just lost their full-time job. They're getting unemployment for 1.5 years before they're looking for new work. Many of them. The 900,000 part-time jobs were people on Main Street suffering because of Biden's insane economic policies. We've driven the price of fuel so high that it's cascaded into the price of every product on every store shelf in the country. The prices can't be sustained. People can't pay it. It's breaking their back. 900,000 people went out and either got a second job, a part-time job, finally came to the reality that they had to enter the workforce and get some kind of job, or as seniors went back into the workforce, working maybe as greeters at Walmart, because they can no longer get by month to month with the utility bills, the food bills, fuel bills, the utility, they can't get by, they can't make ends meet, so they're going back into the workforce. So you've had 900,000 part-time jobs. Students getting in the first time, people taking a second job because they can't make ends meet, and seniors going back to work. Now, does that sound like the economy's doing just fine to you? That sounds like people are on the edge. They're barely getting by. The whole thing's about to teeter and topple over. And then, of course, 45 days later, they revise the employment numbers. And the statistics are always rolled down, almost always substantially. So these employment reports that you're being fed as the reason why we can't lower interest rates, because the economy is still going too well, and if we lower interest rates, that'll put too more money into circulation. That's nonsense. Starting the lending back to Main Street will let people pay their bills. It will let people make ends meet. It will let people catch up. So it's important that you understand this is being done to you intentionally. It's being done to you either by people who are fundamentally evil or completely obliviously stupid. And it's going to hit Main Street, which will cascade into the banking system, which is on the verge of insolvency with all the commercial real estate refinancing defaults that are coming up. And the stock market, Wall Street is just oblivious. They're flush with cash. They don't care. There are $5.4 trillion sitting on the sidelines in money markets, not available to the banks or Main Street, waiting for a buy-in opportunity on a market at an all-time high. Main Street can't catch a break or get a loan. Wall Street's got $5.4 trillion sitting on the sidelines in the institutional hands. How'd that happen? 2020. They bumped the money supply, the M1 money supply, which is the readily available cash deposits on hand in society collectively. They bumped the M1 money supply from $4 trillion to $22 trillion in 1.5 years. They printed 18 trillion new dollars. Not 4 or 5, 18 trillion. And that's where all the money went. The money they passed out to the individuals got spent by people who weren't working. They just spent the money. They didn't bank it. They didn't save it. Those who did have run out of those funds now. And where did they do? They spent it all and it funneled into the hands of the institutions, which have it sitting in money market accounts earning 4.5%, the short-term treasury rate. And they're not going to take it out of the money markets to put it in the banks to buy CDs because the banks are only paying 2% on the CDs. So what do you want, 2% for 5, 7, 10 years? Or you want 4.5% renewable every 6 months? Yeah, right. Tell me about it. Go tell Jerome Powell about it, because apparently he doesn't get it, and he's in charge of the destruction that's coming.